Give me 1 second. All right, so here's my thoughts on US 100, Nasdaq, CFD, and we'll take a look at NQ as well. Structurally, they look a bit different, and we'll get to what my expectations were and are now currently. I'm going to give you a bias or an objective, what do you call it? I'm going to give you a logical reasoning as to why I expect what I expect and what happens next, right? Just give me a second. Right. On a monthly perspective or point of view, we were looking at this previous low of August. We'll just zoom in there. The previous low of August was wicked through, and it immediately drew my attention to the high in September, right? I would have liked if we drew towards that high, but price had its give me a second. Price decided to do whatever it wanted to, right? So I was short. Most of you know that I was short all the way up here at 15.7. I closed it way too early. I shorted this Thursday, 12th of October, closed it way too early as well. And I was expecting, when we started to push up from here, I was long on NFP, and I wanted this draw of that monthly wick to be taken out before we rolled over, right? So structurally, what it would have looked like was we had an impulse to the downside, and then we corrected in what I call a flat type structure or pattern, and I would have wanted it to be like this, right? And then we follow that by another equally impulsive move like this to the downside. Let's do that right there. What we did get, however, was failure here, and we pushed to the downside right here, which makes me wonder or think that this level here has now created a level of inducement in the market. Right here, we'll just label that inducement, because it's a high before breaking these lows down here. This should house liquidity. This should have been the target up here. Now, we've broken the lows this week already. We are coming into these order blocks right here, and if I really had to choose one, I may go for, give me a second, where's this tool? I first went for this one right here. Not much of a displacement out of it, so we may go for this one instead, right? Which we are tapping into right now. Now, two ways that I am looking at this. The first is, if we look at it structurally, this is, I'm going to try and label these. This was an initial impulse, and we expect something of equal magnitude on this side at some point, right? Everything in between with this zigzag leg that you see here like this is a corrective portion, which leads me to believe in this logic that when we do reverse, or if we do reverse, I won't say when, I say if we do reverse from these levels down here, that price is going to seek to take out this inducement, and it may go as high as taking this out as well before rolling over, right? Still early days. The second way I looked at this, mind you, this is merging wave theory with price action concepts. I looked at this entire structure here as if we started a new move down, and this is the first leg of it, right? We'll just make this red, make it a bit bigger, and it would end up looking like a descending wedge or a leading diagonal pattern where we have 5 legs to the downside, and each of these legs overlap with each other, which would then be followed by a corrective move up like this, and then we really see a push to the downside, right? So in both of these instances, the targets are more or less the same, right? The only difference would come in this leg. In this pattern would be 3 legs up. In the other case, it would be much steeper, look more bullish, and come in as 5 legs up like this to the upside before rolling over, right? That's the only difference in terms of targets and how they would look. So right now, at this point, I am doing nothing. I'm looking for confirmation on an H1 at least, and preferably after Paul speaks, maybe tomorrow. We are looking for reversals here. Now, what would a reversal look like for me to action anything in this area, right? We're coming into what some may consider an efficiently traded range or balanced price range here. If you look at the number of legs we had coming in this, we had buy side, sell side, buy side, sell side, and we left the range, right? If we had to take, let's say, a fib tool and fib from the low here, body to body, to the high right here before we left the range. There, I mean, we could even use this high, nothing wrong with it. And then we dragged this out in time. Let's have a look. We should be around equilibrium, right? Which we are. We've just broken through equilibrium right now. So in my opinion, this would be an ideal place to look for reversals if that's what it wants to do, and hit these upside targets and clear this inducement out here, right? We can't expect lower pricing if the inducement level or inducement highs are still in the market. And what it has done here, it's also created what some may call trend line liquidity with this high and this high right here as the trend line, right? So taking this and this out back to this level, because there still is some imbalance up in this level here, and then we roll over, I wouldn't mind it, right? I won't hold my breath or count on it. We'll be looking for low time frame reversals at this level. So now if we go to an H1, what would that look like? Structurally, we would look for any breakaway gaps to be closed above, right? We like to see lows being broken, like you see here. Let's put that, what shall we put on this? Liquidity grab right there. And this would then give us a change in the state of delivery high or candle candidate right there. If we were a bit more aggressive, we'd fib 50% of this candle right here. And once we start to close on an H1 above 50% of this, we could start to scale into long positions to the upside, right? A reversal for me would be once we clear the H1 highs here, which gives us a change in the state of delivery, or alternatively, we print a candle like this right here. Let's just darken this up. And we head one more lower, taking this low out. Then we have a change in the state of delivery. This breakaway gap that was created right here, we close above it, we retest it as support, and then we start to push upward. Once we have that kind of structure in place, well, I'm not sure what Paul is going to say today, we could then use our Dexter fibs, I suppose, if that's what we're calling it. Dexter fibs, fib a reversal like that, and see where this wants to go to the upside. Lo and behold, 2 to 2.5 standard deviations gets us to this level up here, right? Just below here, but more or less above this trend line liquidity here and above this high here. Once we get above this high, we can start looking or seeking shorts if that's where it wants to go. What we need to do on the low time frame is reverse first. So I won't be doing anything here right now until I see reversal or signs of market structure shift or reversal, because this could come in as a Wednesday low of the week. Monday, Tuesday, Wednesday takes the low. You start pushing up into Thursday, retrace Friday, like so, and then we carry on pushing upward, right? So a lot of imbalance to the upside and a need to want to come and print up candles in this area here. So possible, right? Now, what's the other scenario? We've created a dealing range, classic dealing range here. We've taken buy side above this. We've now taken sell side here. You could then call this your dealing range right here. If that's the case, and you think the price is about to head much lower, you would be looking for shorts at or around the 50% level. Any PD array that supports that, like a fair value gap, FEG, you could use something like that and frame a reversal setup right here at this breaker inside here. FEG looks like a unicorn setup, right? But all depends on what's going to happen right here, right now. So I'll be doing nothing until I see clear signs of market structure shift here. Make sense, guys? You there? This is going to be recorded and uploaded to YouTube. I don't want to get into too much of the other stuff that we use, because that's not necessary right now. Try and keep it simple. CSD, market structure shift, OBs created in liquidity, and we'll look for reversal signs here. I'm not even sure if my mic is working correctly, because you guys haven't said a thing. So
your mic's working, boss.
Okay.
I just jumped on a minute ago.
Cool,
But yeah, your mic's fine.
All right, cool. Yeah, so I'll upload this to YouTube. You can just run through it on your own time. Maybe tomorrow we'll do our own group a stream to get into the details and much more. This was just this was just a little touch on NQ or Nasdaq. For the guys on YouTube, someone requested it yesterday. If you look at NQ, it looks structurally, it's a bit different right here, right? Especially around this area here. It went lower here, so that's the pattern I'm looking for. If this was an A corrective A wave, A, B, C, this is a B wave. We're looking for 5 up here, right? Because the idea is 3, 3, 5. And if this is a C of a B, you can see here 1, 2, 3, 4, 5, right?
Yeah, and it's very hard to ignore that whole diagonal, massive diagonal look of all of this.
Yep. I touched on that as well. So that's the diagonal look that Sloth is talking about right here. Now you see how structurally it looks a bit different here on NQ, because ideally this should have or if you look at the CFDs, this was lower here and then we only broke the lows right now, so it gave it more of that kind of look. But like I said, Whether it's a flat correction, whether it's a diagonal, the idea is the same, right? Descending wedge, look for something like this, or even if they want, this will decide what it is, right? This leg coming in right here. If they F around and start to go sideways here, then go up, then I'd scratch the idea of this flat pattern that I had here before we head down here. And then I'd look at this being a descending wedge and this being the correction of that, because this should take much longer in the middle here. Then we expect that to happen. Yeah, that's it. We'll touch base in Discord.
Awesome. Thanks, boss.
Thanks.
Thanks.